Ag AM in Kansas is brought to you in part by Sure Crop, liquid crop nutrition delivered right to your farm.
Good morning, welcome to Ag AM in Kansas. I'm Jim Schroyer, and with us this morning we have Darrell Holaday with Country Futures. And Darrell just gave a presentation here at the Commodity Classic, and things don't look all that peachy for some of the commodities. So let's just go through them.
Well, in the big picture, one of the big things I really tried to point out is the fact that the sky's not falling, but there's a heavy fog. What I mean by that is it's pretty negative. What we really got to have is some type of production problem somewhere in the northern hemisphere, and right now we just don't have one in line, but that can happen. Without that, we are looking at significantly lower price. We're down from last year. We're going to be lower again next year.
Now you're saying for all commodities?
This is okay. Yeah, that's in a general picture. That's true of all commodities. The one I'm the most concerned about is soybeans, and that I believe the market has signaled that it needs a lot more beans than it really needs. And now with the big South American crop coming on, and we're signaling trying to put more acres in the ground in the United States, that I don't think the demand can keep up with that. And so the down move in the next 90 days that I'm afraid will be worse than people think is on the soybean side. Corn and wheat, I think in the next 60 days will stabilize. I've stabilized where they're at. I don't see a lot of downside in those. The downside in those markets come later as you get into summer, and like in wheat, we get the wheat harvest. That would come low in September.
Basically.
And if we don't have if we don't have that problem I'm talking to you about that we really quote could use, we're talking about 4.25 prices, futures prices in the summer and the September low on wheat, and then the 3.05, 3.10 level on corn, but that would be next fall, not in the next 60 days.
Okay. And now, where do you think soybeans are going to go?
Well, my concern about soybeans is I think there's a lot of pressure in soybeans in the next 60 to 90 days.
Right.
Right now, if you use a futures-based for a marker, we're in that 960 area, 970 area on beans. I think we will test $9, and as we get on into May and we get the planting in, if U.S. crop planted, I wouldn't even rule out 850 to 880. Then I think we'll hold for a while. But if we do indeed put 2 million more acres in, we don't have that problem as we talk about. We could use by next fall. We would be talking anywhere from 6.5 to 7.25. Major down move in beans, if that were all to happen, because we're just simply the world stocks of soybeans have grown on us. Demand is extremely strong for beans. I don't want the Chinese demand, but we've really exceeded that. I've tried to analogize people with the soybean market. It's a little bit like the crude oil market. For a period of a couple of years, the market hung at $90 to $100, despite the fact that crude oil stocks were building, production was building, because everybody just wanted to own crude oil. Everybody thought crude oil was something you ought to own. Right. And it encouraged a lot of production that, to be honest with you, we really didn't need. So when the market broke, it was in a lot of trouble. And that's the way I see soybeans. We've encouraged some production that I question where we need, and when we break below even $9 or get down in that 850 level, we will go significantly lower than we may think, and that's a problem.
Okay, so let's switch to corn. It costs a lot of money to put corn in the ground, and it's been a great crop, a good return in the last few years. Do you think the price on corn is going to push people to grain sorghum or back to wheat? Do you see any movement that way?
I think we'll see some, but I think it's very limited. We're still a year away from that happening.
Okay.
I don't think because of the yields last year. Now, I do think there will be moved to grain sorghum out here in the west areas because the premium grain sorghum has, and that's because sorghum is going to China.
Right.
That's the MR162 issue. That premium will stay there, and I think we'll see more sorghum this year. Now, next year from now, we may not have that premium, but I do think that'll happen. We'll put more bean acres in. The corn acres will hang in there just because the yields have been good, the technology's good.
Right.
We're a year away from making that major shift. And I also think that you're going to see corn supported in the next 3 or 4 months until it knows we've got those corn acres in the ground.
Right.
And because the market doesn't care what cost of production is, but it does over the long haul care what your cost of production is, because if it reduces acres, it will happen. And corn's going to move a lot with what the energy market is, what ethanol is able to do. And that's what we've seen happen. That's what's happened in the last 60 days, why we're 40 cents off our high because of the decrease in ethanol values.
Okay. Darrell, appreciate you taking time to talk with us this morning. Folks, thanks for being with us on Ag AM in Kansas.